Hey guys, welcome back. Today we're talking about gorillas and how it relates to GameStop, Wall Street Bets, the subform of Reddit. Where did it all come from? Why all of a sudden people are pouring their money into sponsoring and adopting gorillas? Well, let me try to explain as best as I can. You might be seeing a lot of trending and popular upvotes in Reddit and Twitter and maybe other media outlets where people are actually doing all this for the Gorilla Foundation or the apes. One of the reasons that led into that was because of Wall Street Bets. But why does one relate to the other? How did Wall Street Bets become a bunch of apes and gorillas? Well, if you follow Wall Street Bets in the subforums of Reddit, you would find it pretty interesting that a lot of their memes surround themselves around being gorillas and apes because they run strong in numbers. I find it to be one of the most entertaining things to go on subforum Reddit Wall Street Bets and look at all the memes that people post because the videos are so entertaining. I've actually included one in this video that you can just experience for yourself. Some are long, some are short, but in most of them are pretty entertaining on how they depict who's who, what characters they play. So here I'm going to try to put a timeline on going backwards. Now, the gorillas, the whole foundation of the gorillas, supporting gorillas and adopting them started because of GameStop. But then you ask, how does that relate to GameStop? Well, in Wall Street Bets, they all collaborated, or I shouldn't say that, they all contributed to buying the GameStop stock. Now remember, I'm going backwards, so bear with me. But then you ask, why did GameStop become such a popular stock? Well, because the hedge funds were planning to short it, meaning they were hoping that it goes lower in value. But when people on Reddit, on the subforum Wall Street Bets, found out about this, they were not too happy about it. Everyone started buying the GameStop stock. That drove the price up from its initial, I believe, around $5 per share all the way as high as almost 350 plus. Halting for the stock actually stopped a few times, which was very concerning because people, normal everyday retail investors like you and I, who are not carrying millions of dollars, maybe some of you are, but definitely not me, were very upset with Robinhood because they were a commission-free trading app that was allowing you simple individual users like me and you, the retail investors, to do our daily trades. But there was a period in time when GameStop became so popular, they halted all those trades and only allowed you to sell. Now, you know what happens when you do that. It drives the price back down. So that became an issue of itself, and there was a hearing that was in place with the people who were in charge of Robinhood, and then the individual who called out GameStop with all the shorts, hedge fund, which was Melvin Capital, and then there was another company called Citadel Securities. Now, I'm not going to go into all the details of who they are and what they are. You could probably find out when you do that Google GameStop, Game Short, whatever you want to call it, GameStonk. All that information is out there. But my timeline is to show how did this whole gorilla thing come about. So GameStop stock has had a hell of a roller coaster ride, and it all began last year, more or less, by an individual called Roaring Kitty, aka Keith Gill. He is also the one who found that there was a huge short position on GameStop and made it known that that was not going to happen. He has a lot of videos on his YouTube that shows his knowledge in that position of GameStop and why he believed in the company or why he liked the stock. I have a few minutes of his video at the end of this to show you that even during that time in August of 2020, he was already finding that GameStop was a buy for himself. So I will let him explain all that in detail. Now you should know how GameStop created this whole community of apes and gorillas and why they're being adopted. I want to thank you guys for joining me, and stay tuned and finish up this video. I appreciate you guys for always being here. Hope this GameStop gorilla thing and Wall Street Bets kind of put an explanation to everything in perspective for you in such a short video. Thank you guys again.
Yo, what up? The GameStop thesis is super simple, but it's often misunderstood. Everyone classifies it as a cigar butt and then just moves on. But it's more than that. Yes, the legacy business is up against some very real secular risks, and the new consoles coming out this year might be the company's last hurrah. But this isn't some horse and buggy shit. GameStop is an established, uniquely positioned player in a thriving $150 billion gaming industry. And this is why GameStop is different. Its final puff is a legitimate opportunity to reinvent itself as a premier gaming hub. Many investors assume GameStop will be forced to close its doors within a couple of years, so they're only focused on how much free cash flow this console cycle will bring in. It's a reasonable point of view, but it's incomplete. Investors also need to consider whether GameStop can opportunistically leverage the console cycle to transform into a more sustainable gaming-related business. And that, like, GameStop isn't a cigar butt. It's more of a roach, right? That last hit might not be the prettiest or the cleanest, but it could get the job done, if you know what I mean. It could get those creative juices flowing too, right? Over the next year, GameStop's new management team could uncover ways to engage its 60 million Power Up Rewards members and attract new customers to a more experiential type store. Are they likely to pull it off? I don't know. It could go either way. But so far, it kind of seems like they're on the right track. And when you consider what their balance sheet will look like 12 months from now, the opportunity is there. In my view, it's just a matter of execution. Fortunately, from the security analyst point of view, at a market cap of $260 million and an enterprise value of about $100 million, the downside is limited. Following major write-downs and balance sheet repair, their financial situation is pretty solid given the circumstances, with a reasonably fair net asset value of about $400 million. They just closed Q2, which will be another rough one. But following that, I like the stock. We like the stock. We like the stock. Yes, we like the stock.